Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to go through the portfolio as we always do at the beginning of the week and show you where we landed. And then we're going to talk about this looming recession that everyone keeps talking about when you hear from the news, when you hear about companies predicting that we're heading into a recession, people on YouTube, and some things that are going on. But we're going to get to that at some point in the video, and it's probably going to go somewhere. We're going to talk about what you should probably look at when we do head into a recession. Now, I don't know what the future holds for us, but can't always go based off of what we hear, unless there's like straight facts and stuff like that, but we'll figure that out. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. If you're not new, welcome back. So the portfolio today closed out at $15,484.64, up $145.11, up 0.95%. So not bad for the day. And we've just had a good run for the past week and a month or so. For the week, we're up $240.57, up 1.58%. For the 1 month, up $948.36. 3 months, up $121.89. up 0.79%. For the 1 year, we're down $148.03, down 0.95%. And for the all, we're up $1,603.69, up 11.55%. We have $110.13 in the cash account. And yeah, that's the portfolio. So you can see a lot of the things, a lot of good things in this portfolio that are happening. The Vanguard S&P 500 is up. TD sitting pretty stagnant. Royal Bank had a pretty good gain. Qualcomm, semiconductor company, multinational company, US company, has done very well today. Manulife Financial Corporation, Cisco is up. Everyone is pretty much up there except for your telcos, which is fine. So that's the portfolio. So let's talk about this looming recession that's on the horizon that everyone keeps talking about. You hear bits of it. And yeah, just a lot going on. Sorry about my cough. I'm gonna drink some water here in the video. Just a reminder, drink your water. But yeah, so we've heard of the defensive stocks or consumer staples, but there's actually another side of that. There's like an opposite investment strategy, opposite of consumer staples or defensive stocks, as we like to call them. And this will probably lead from my last video as well, the stock pick that I'm making, which by no surprise is a similar stock pick to Warren Buffett, who is investing in a company, who invested in a company called TSM, which is a semiconductor company. And it seems like I'm running into those videos more and more often. People talk about semiconductors, people talking this new word. Remember how during like 2020, the word was unprecedented? Now in the investing world, it's cyclical, which is very funny. So you'll probably hear that term quite a bit, but that's exactly what we're talking about today. And it does play a part in what you could possibly do in a recession when continuing to invest, because you'll find the opposite of a defensive stock is a cyclical stock. And what is a cyclical stock? Well, a cyclical stock is a stock that is typically, or a company that is affected by changes in the overall economy. So what does that mean? That means during whatever cycle the economy is in, whether it's an expansion, whether it's a recession, whether it's in a recovery, a cyclical stock will typically follow the overall economy. So if you can guess that when a market is up, a cyclical stock will follow that. And so what are kind of examples of cyclical stocks? You probably already know this, because a lot of the companies in 2020 that really dropped were consumer discretionary. And what's consumer discretionary? It's where consumers spend extra money that is not necessarily needed. It is like guilt-free spending. So what are examples? Restaurants, cyclical companies, cyclical stocks, hotels, including Airbnb, airlines, high-end clothing retailers, and car manufacturers. So all these types of industries will follow what the economy does, because typically the consumer will cut spending in times of recessions, in times of downturns, or in some cases, what we saw in 2020. Now, 2020 was kind of an odd year because it seemed like everything was going up, but then again, there was a bunch of money being printed. You had CERB payments in Canada. You had the other thing going on in the US where everyone got their checks. But we're not here to talk about that. So these companies will typically just follow the market. And if a recession is looming over the horizon, you can maybe look at something like cyclical stocks, companies that you may have thought are not really of a good value currently. Maybe they're overvalued or whatever, but just make sure you do your due diligence, because if the market falls, this is kind of the opportunity where you can get into those companies like airlines, like manufacturers, and maybe you can possibly, as long as you do your due diligence, you could come out the other end making a pretty coin. And so that's what a cyclical stock is. And that's how you probably could beef up your portfolio in times like a recession or a downturn, because when it recovers, people will find that they have more capital in their pocket, more discretionary spending happens, where you're buying phones, you're buying, they're probably buying cars, they're buying nicer clothes, they're buying all this stuff that's really not, I should say, probably more of a luxury than a basic need, like housing, food, and basic clothes, like your undies and your socks. But yeah, so if you can find a good value, because this is where it comes into play, because and don't get me wrong, this is probably going to be my first recession, because I was not old enough to invest during the last recession, which was 2008. And so when the market's down, this is where the psychology will probably come into play. And people do talk about the mindset when it comes to investing. That plays a big factor. Of course it does. Because if a stock is down, the market's down, we don't know when the economy is going to recover, because the economy is almost tied to the cyclical stocks that are in play that you're looking at, and looking at the fundamentals. And that's why it's so important to actually learn how to research your companies, figure out how they operate, figure out where their capital is being allocated, reading financials, reading cash flows, reading balance sheets. Even if you're not in the financial sector of your job or anything like that, it's always a good skill set to learn, so that you can really understand what a company does to make its money and its profits, so that it can continue to grow, but also give you return on your investment. Because we don't want to invest in a company that might not survive a recession. You know, if you go back to like 2000 and you look at the top 10 companies that were in the S&P 500, today those companies are completely different. And so this is where you really have to pay attention to what the company does, how they make a profit, and really do that part in doing your research and understanding how the company operates. So when the market's down, and it's completely down where everyone is kind of not investing because they don't have the capital to, this is where your opportunity comes. And again, this is not financial advice. Do not follow me into any trades, and please make sure you do your due diligence, of course. This is just my opinion. And so when the market's down, you look at these companies that actually still produce an income. And so a good example for me is probably like Tesla. Semiconductors would probably follow that cyclical stock. And that's the type of sector that I was talking about in my last video. And you know, when people are no longer spending just money on random things like new phones, new graphics cards, which are in your computer, cars, anything that uses electronics or tech or uses a semiconductor, that means the price of the stock will probably fall because it's cyclical and it goes based off what consumers are doing. That's why you see airlines drop, because not a lot of people are spending money on traveling. They're not buying furniture. They're not buying high-end clothing like your Louis Vuittons, your Gucci's, your Champion, your whatever it may be. Okay. And they're not traveling much, as we saw in 2020. So it's kind of similar in that sense, but this will probably be a full-blown recession. I don't know. I can't tell the future. But the key when investing in those types of companies is being patient, right? If you see the value in a company, and price of a stock does matter, you want to buy a great company at a fair value or even a great value. And you want it to be good, right? Instead of looking at any other company and just assuming your biases and just assuming that they're always going to do good. That's not always the case. So you just got to be patient in that sense. So when it does come, whenever that is, and we might be in it already, is an opportunity for you to look into companies that maybe you've wanted to look into that are a bit more luxurious things, like airlines, like restaurants, like clothing, like car manufacturers, and it'd be a good opportunity to make a pretty coin. Now, I'm not saying it's going to be a multi-bagger. I'm just saying that it's probably a good value play if they are operating the company in the proper way. Airlines, not so much, as we've learned over the years. But like manufacturers, right? Like Tesla, yes, some people still argue that it's a tech company, but majority of the company still currently is a car manufacturer, and that will follow what the economy is doing, because not everyone has extra money burning holes in their pockets to just go and buy a vehicle, and especially during times of recession and inflation. But of course, we're battling that. So that's pretty much it for the video, guys. But yeah, last video I talked about semiconductors. That probably does fall in the cyclical side of things, just because so many products nowadays use semiconductors, and I'm using like 5 currently, right? 2 in my PC. There's probably a couple in this monitor, each of these phones, my MacBook, my iPad, you name it. There's a semiconductor somewhere, and it is become like a real commodity. And yeah, so that's my opinion on how to really take advantage of a recession, because some companies will not be affected as badly as cyclical. There's that word again, companies, cyclical stocks. And yeah, that'll be the buzzword of the next few months, and semiconductors will probably be the talk of the next few months as well. So on that, guys, have a great week. Don't forget to leave a like and subscribe if you found some value in this video. Maybe you took something out of it. Even if you didn't, just leave a comment down below. But have a great week, and we'll see you in the next one. Bye.